heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we will have full coverage on TikTok throughout this program. The US House, it passes a bill to force ByteDance to sell TikTok or face a ban in the US.
Plus, the European Union passes the world's most extensive AI guardrails. We'll break down the impact of the AI Act and what it means for the future of artificial intelligence.
Chamath Palihapitiya's social capital, it fires 2 partners after a probe citing an undisclosed situation. We'll discuss what could be behind the decision that involves a much-hyped AI startup.
The moment that the House did pass the divest or ban TikTok bill, there was a significant leg higher in both Rumble and Meta. But I put those up because the conversation will now change, right? We're going to discuss whether the divest or ban TikTok bill will have success in the Senate, but we're already saying this is a foregone conclusion. And we're asking, well, who is going to benefit from a TikTok ban in the US, or who is going to buy TikTok's US operations? And look at Rumble, its gain over the last 7 days, much of it in yesterday's session, on reports that they're considering a bid or looking at options for TikTok's US operations. There's a lot to discuss, but the big step in the House has been taken. Now we move to the Senate.
And still much potential pushback from the Senate, and notably a CEO who went there to lobby just those senators yesterday. Let's get into it with Alex Barinka. And Alex, we understand, according to people familiar, that Shou Chew was indeed looking to target senators in particular.
He was. I think the TikTok team saw this bill potentially flying through the House like it did today, getting that majority vote in just the past few minutes. The next hurdle for them will be the Senate. Majority Leader Chuck Schumer in the Senate has so far not said that he would take up this bill. TikTok also put out a statement today appealing to senators saying, quote, "This process was secret and the bill was jammed through for one reason. It's a ban. We are hopeful that the Senate will consider the facts, listen to their constituents, and realize the impact on the economy." So certainly TikTok CEO Shou Chew, who was down in DC, is going to be spending his time in the Senate, hoping that while this is the furthest a anti-TikTok bill has gone in the U.S. government, that it ends here.
It's not just that Chuck Schumer has not endorsed the bill. It's that there is a bigger concern here as well. And Bloomberg's reporting this idea that even on the Republican side of the aisle, they look at this bill more big picture. Why do we hand these powers to the administration and give them such sort of a blanket power for censorship to make a decision on TikTok? So that's there in the background. But I think I'm right in saying, Alex, TikTok's always said that it's going to mount a legal challenge to the idea that it would have to divest or sell its US operations anyway.
Yeah, you're right. I think it was summed up pretty succinctly to our D.C. colleagues by Republican Senator Tom Tillis out of North Carolina, who said yesterday that he's worried about the unintended consequences of a bill like this. Now, it's been fascinating, Ed, to kind of watch the battle with TikTok in D.C. because Republicans writ large have been some of the biggest agitators against TikTok. Some of that did change in the past week when we had Donald Trump himself, when he was the president who put the first executive order forward to ban TikTok, actually come out and say a few days ago, well, maybe we shouldn't do that because it would give Meta too much power. So certainly we have some wrangling here, not only over whether or not this bill actually addresses concerns or if national security concerns have actually been made clear to the lawmakers, but also how much power this would give the government, this would give the executive branch in kind of ruling over the private sector.
And I point out that in that moment that the House passed the bill, there was a big spike in Meta. It is still lower 0.7%. But of course, TikTok's user base and its platform is highly analogous with Meta's Instagram short-form video vertical. Bloomberg's Alex Barinka has done a masterful job of covering all of that. That is that spike in Meta shares that I showed you, but then an immediate pullback. Right, so sources say that TikTok intends to exhaust all legal challenges before it considers any kind of divestiture from its Chinese parent company, ByteDance. Let's bring in David Glancy, Institute of World Politics Professor and Strategy and Statecraft, and Annenberg Chair of International Communication, for his point of view. For many, David, this was a foregone conclusion. Divest or be banned. Is it as simple in your mind?
I think from the national security community, it's a pretty simple issue. It is a potential threat to national security because of its reach, the way the software is, the potential to influence, but also the close relations. It is a Chinese company. And there was a report that came out just on Monday, an unclassified report on threats, a threat assessment, and China was prominently featured in that. And China's activities in the last few years have been much more aggressive. They've been working with adversaries like Russia and Iran more closely. And so I think there's real concerns. And from the national security community, it should have been done probably years ago.
Now, of course, we know that this has been considered for a long time in terms of the worries of Chinese influence. And TikTok itself, Shou Chu himself, has gone to lengths to say, look, we can alleviate that. Project Texas, for example, ensuring that Oracle is in some way facilitating the way in which data is read or indeed not transferred to China. How much have you read into, well, the ability for that to ease any of your concerns?
The fact that it's a Chinese company and still has to abide by Chinese laws, which, when push comes to shove, would require data transfers. The other major concern is their algorithm and the ability to potentially push influence messaging that we wouldn't be able to detect in real time. It would be really difficult to detect some of their longer term influence activities if they were to shift their algorithm for more malign purposes. And that's a real concern for the national security community.
David, 170 million Americans use TikTok, and many of them like it. Are they being represented in this process?
I think the Senate's going to have its say. I think the fact that it's been delayed for a number of years and there hasn't been action, that's a testament that they have been. There's been a voice for those folks in the process. So I think we have a system of laws and rules and ways to appeal, and there's a lot of different avenues for people to have their voices heard. And I think that's a strength of the U.S. From the national security community, at least, this is sort of a no-brainer that the action should have happened a while ago.
You've worked in the State Department, the Defense Department. If this doesn't go through, what does that mean for China and the U.S.?
I'm actually a little bit concerned. If the Chinese government thinks that it can block policy action on important issues by appealing to domestic political factions or special interests, then I think that makes a more dangerous world. That may embolden the Chinese to be more aggressive, and it increases the potential for direct U.S.-China conflict in the years ahead.
We want to thank you for your time, your expertise, Institute of World Politics Professor of Strategy and Statecraft and Annenberg Chair of International Communication. That's David Glancy. We thank you. Coming up, more regulation, this time from the EU. It passes a landmark set of AI rules. We'll have all the details for you. This is Bloomberg Technology. The European Union today has passed the world's most extensive rules on artificial intelligence. Now, the landmark set of rules could set the tone for how AI is actually governed in more broadly the Western world. For more, let's bring in Bloomberg's Gillian Deutsch in Brussels. And many would say that some of the lawmakers have never been lobbied as hard as they have been over this particular AI Act. What's the takeaway for companies trying to build?
That's a great question. So right now it's a big celebratory day here in Brussels. I think last time I was speaking to you, it was after almost 40 hours of negotiations in mid-December. Fast forward, 3 months, and now we have the Parliament signing off on this act. And while it's not a celebration, we are getting lots of concerns, of course, from tech companies. They've been really sounding the alarm bells for quite some time about overregulation, concerns that, the European continent will be behind because they're regulating much more ahead than their U.S. Counterparts. We also have this concern, of course, from European tech companies too, and startups who say, "Hey, we really want to compete with U.S. hyperscalers, and you can't overregulate us. If you overregulate us, we will never have a chance to actually compete."
Okay, I'm Mistral, and I am building large language models, and I'm based in Europe. Now that the act is passed, this is done. What is it that I actually have to do to comply?
So there are a few things. I guess it's good to look at the EU's approach as a risk-based approach. So for the most part, they're actually just regulating the use of the technology, not the technology itself. So this means that in practice, the EU will be banning, the worst possible misuses of AI. So AI systems cannot be used to, perform emotional recognition in workplaces or schools, cannot be used for social scoring, so giving citizens a score based on their behavior. When it comes to high-risk situations, though, these are some of the more tricky ones. This is, AI systems being used for migration applications or certain job applications. A lot of these companies like OpenAI or Mistral will have to perform a lot more checks in order to prove to regulators that they're safe. The one exception that a lot of companies like Mistral were really lobbying hard against were these additional controls to general purpose or generative AI. And these are not based on the use of AI, but this is explicitly regulating the technology itself. And in the end, what these companies will have to do is perform or kind of prove to regulators, their energy consumption, prove that they are actually complying with copyright laws. And there's a new AI office that will be based in Brussels and that the EU is currently setting up. This will actually kind of operate almost like a police force where they can go to the likes of Mistral, OpenAI, Microsoft, whomever, and say, "Hey, we want more data on how you've trained your large language model." And ultimately, they can even ban an application if it's performing poorly.
Gillian, Mistral has indeed partnered with Microsoft, and one expert saying that EU lawmakers, they've got played in this particular situation. Why will this not be a read across to just how the rest of the world adopts AI legislation?
I think it's really interesting because last year we saw lots of these tech companies even pushing for regulation. We had Sam Altman, obviously, in Congress, as everyone knows, pushing for regulation. And so we've had that obviously in Brussels, but while they've been arguing for regulation, they've also been simultaneously lobbying quite hard against some of the worst or the strictest controls that they've seen in Brussels. Mistral was a really clear-cut case of that. Last year, they were really effective in getting the French government, also Aleph Alpha, a German startup, really pushing these governments saying, "Hey, if you overregulate us, then we will not be able to compete with US companies." Now, fast forward 4 or 5 months, they were obviously partnered with Microsoft. And so that's left a kind of a bad taste in a lot of lawmakers' mouths. But we also have lots of other companies that are really, signing on for voluntary commitments, trying to prove to governments they're taking this seriously, that they're taking as many commitments as possible. But I think more and more regulators are starting to wake up to that tech companies might be self-serving.
Never. Gillian Deutschby, thank you so much. Ed, what have you got coming up?
The other top tech stories that we're watching in Talking Tech. First up, the Pentagon is pulling out of plans to spend as much as $2.5 billion on a chip grant to Intel. That's according to sources. The move threatens the total amount of federal funding that Intel was expecting to receive and now puts the onus on the Commerce Department to make up a shortfall. The funding was part of a package that allocated $3.5 billion to Intel to produce defense and intelligence-related semiconductors. Plus, shares of Singtel climbing the most in almost 2 years. This after the Australian Finance Review reported that Singtel was in discussions to sell off carrier Optus to PE firm Brookfield for $10.6 billion. Singapore's largest carrier responding to the report saying there was, quote, no impending deal to offload Optus for the said sum as reported. And Google is curbing its Gen AI chatbot Gemini from responding to questions directly to the Indian general elections. That's beginning next month. This follows similar controls it's set up in the US and other countries that are holding elections this year, all in this effort to combat concerns over misinformation and conspiracies. Google, meanwhile, collaborating with the Election Commission of India to enable easier discovery of vital voting information with Google Search. Social Capital, the venture capital firm that's led by podcaster and former Facebook executive Chamath Palihapitiya, fired two of its partners, citing an undisclosed, quote, situation. That's according to a letter it sent to its investors that was reviewed by Bloomberg. I want to bring in Bloomberg's Mark Gurman, who broke this story. And actually, in the last hour, Mark, you've updated the story with more information, particularly about Ravi Tanuku, one of the partners terminated, because you've heard from his lawyer. Tell us the latest.
Yes. So yesterday morning, Chamath, as you mentioned, former Facebook executive, he's on the All In podcast, sent a letter to investors in Social Capital, to say that two of their top partners, Jay Zaveri and Ravi Tanuku, they were fired. They hired Wachtell Lipton, a big-time law firm, to review and probe the situation. And after a probe, Chamath terminated both of them on Sunday. The situation in question happened last Tuesday. And in the letter, all he did was call it a situation. So there's been a lot of intrigue within Social Capital, in the investment and venture capital communities about what exactly happened here. There's been all sorts of speculation, but now we've learned this comes down to Grok. It's an AI startup that Social Capital invested in, 5-6 years ago. And this had to do with the partners being involved in offering a special purpose vehicle related to Grok to some outside investors. This happened after, Grok was worth maybe 60 million a few years ago. Now its valuation topped $1 billion. So special purpose vehicle related to that and all the money to be earned there. The company only said, Social Capital, that the two men violated company policy, but didn't go beyond that. And we've heard from lawyers for both of the men who were terminated saying there is no wrongdoing. And once they show their case, the public will know that they've done nothing wrong. And Chamath and Social Capital haven't responded to those responses.
Mr. Zaveri's firing was unfair and undeserved, so says the spokesman, and the firm's leadership approved and participated in the investment that is now being used as a pretext, they say, to fire him. Ultimately, Mark, how unusual is it to get such little information when such a step is taken? How unusual is it to lose such partners from a firm?
Oh, I mean, people are fired from firms all the time, but it is pretty unusual, especially you're showing the tweet from Social Capital. What they've done there by saying employee-specific circumstances and saying they have no further comments at this time, not even naming the people in the initial tweet, all they did was create a bunch of intrigue about what exactly happened. If they had come out and said initially what happened, maybe it wouldn't have been such a significant news cycle. But they handled this poorly from the get-go. And it was really a 3-sentence email from Chamath to a bunch of outside investment partners that really got this going. And in that email, all he did was call it a situation. He said, if you want more information, give me a call. So lots of intrigue here. So yes, an unusual situation indeed.
So Mark, Social Capital is basically not saying anything, giving any details, but we know this has something to do with AI startup Grok. Just explain the basics of that.
Yeah, I mean, there's a lot of speculation on what exactly that means, right? This AI startup, their valuation completely just went through the roof. And I guess there were some concerns from Chamath potentially about that investment and how that investment was handled and how outside investors had been dragged into that. We're still trying to gather more information on what exactly is happening here. Our hope is that the lawyers for both sides start presenting their cases to the public and perhaps send us more information about what's going on here so we can really understand. But this seems really abrupt, right? Having the quote-unquote situation appear on Tuesday, hiring a law firm on Thursday, having both partners terminated on Sunday, and then this announcement coming via email on Tuesday within 1 week. This seems like something that was done very quickly, something that may have been done in a rash manner. But really, we're going to need to know more information before we can really determine, who's in the right and who's in the wrong here.
And indeed, we have invited Chamath Palihapitiya onto the show and Social Capital to get a little bit more of that information. And I know, Mark, you have got plenty of queries out there with them. We thank you so much for breaking it all down. Mark Gurman, thus far, Social Capital has not responded.
Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde in New York. Let's get you a quick check on these markets because, well, maybe a little bit of a sell the news after we take some profit on yesterday's gains. Once again, we're off about 0.8% when you're looking at the key benchmark that is the NASDAQ 100. So drawdown in particular when it comes to some of the key chip names, NVIDIA under pressure, Micron as well. So keep an eye on those chip stocks. I'm looking at the US, also perhaps dictating the path of trade for equities is what's happening in the bond market. When you see yields just pushing up a little bit on the end of the curve in particular, we've got a 30-year auction that's coming, and well, there was a bit of lackluster demand yesterday. We could see a bit of pressure. Bond yields, of course, go higher. Quite often we see tech stocks go lower. We're seeing Bitcoin still managing to carve its own path. We're up more than 2% when you're looking at Bitcoin. We're up 72,761. Move on some of the individual movers when it comes to the tech names. And I'm looking, as I say, at the chip stocks. These have been pushing generally on the pressure of the NASDAQ. We're off by 2.6%. Tesla as well, seeing yet another day of losses, off by 2.7%. This as we see analysts once again going negative on the stock. And I'm showing some particular companies that are outperforming though. PDD, Chinese names, interestingly, on the higher side. No real catalyst for this. We had some mixed reviews coming from analysts at Monday's trade with, well, certain analysts saying like buy this stock, Goldman saying no, but we're up another almost 5% on the day, even as we continue to digest US-China tensions. And we're going to go back to that TikTok story in a moment. But now let's focus in a bit on what's happening with the crypto rally. I'm pleased to be welcome Tegan Klein, CEO of Edge and Node. It's a software development company behind the Graph, and actually an indexing and query protocol organizing the world's open blockchain data. And last time I checked, well, the crypto related to the Graph is seeing about a $4 billion market capitalization. Tegan, tell us about some of the exuberance, is it, or just natural interest that's coming into the space at the moment, given the ETFs that we saw launched? Will it stay? Is it sticky?
Absolutely. I do think it is sticky. Obviously, these markets are secular, so it won't be a straight shot up. But, the total wealth in the world is $450 trillion. And I think Bitcoin will take at least 10% of that, if not more, over the next decade or two. So a lot of room to grow. I'm looking forward to it. The ETF, a lot of this was unexpected. The volumes that we've seen, over $1 billion yesterday came in inflows in just a day. So I think people were expecting tens of millions, and we're averaging hundreds of millions a day just in Bitcoin alone.
Tegan, as you run your business and you build out the technology, does it matter to you if Bitcoin is at 72,000 US dollars per token or 80,000 US dollars per token?
It doesn't. I don't really pay attention to price. We're here building. We've been through many bear markets, many bull markets, but it is exciting to see more people getting involved in this ecosystem. And crypto is definitely here to stay. The number of Americans holding crypto is only growing. And so I'm excited to see that continue.
One question we've not asked as much recently is whether the kind of negative overhang around your industry has gone away. We talked about how 2022, 2023, there was a bit of a black eye. A lot of it stemming from the collapse of FTX and what happened with Sam Bankman-Fried. Now we're focused on the trading activity of Bitcoin, the authorization of spot Bitcoin ETF. Is there some feel good in your world at the moment?
I would say, I think that it's important that we learn from the lessons of the past. When you look at things like FTX and the recent implosions or the more recent implosions, a lot of that was when it comes to centralized tech on top of these decentralized ecosystems. And so it's really important that when you're thinking about crypto, especially in a world of an ETF, that you're self-custodying that crypto, because then you have true ownership over your assets. And it's really difficult to get that without self-custodying your assets.
The irony being, of course, with the introduction of ETFs, we're seeing a broader surge of people able to benefit from the gains or indeed just broader volatility of Bitcoin without having to go through the rigmarole of self-custodying. Tell us a little bit, therefore, about the underlying technology, what you're building, and ultimately whether any of this will be more than speculation. What is it that the infrastructure that's necessary now to actually be real rails, be a real alternative to normal finance?
Absolutely. Yeah. So it's easy to kind of look at the screen and see these tokens and the trading volume and all of that. But when you look underneath the hood, a lot of these ecosystems, there's an ecosystem underneath. There's a thriving community of builders and individuals that are participating in these protocols. So when it comes to the graph, we're organizing data. We're ensuring that data on the internet isn't corruptible. And last quarter alone, we saw 950 million queries, so almost a billion queries. And that's, you can think of that like a search. So Web3 Web3 usage is at an all-time high, and I think that's only going to continue. And when you look at crypto, you want to think about Web3 and you want to think about monetary policy. Bitcoin has very much proven monetary policy, and Web3 is something that we are currently building to decentralize the internet.
How global does that end up being? Where are the investors, the builders, the queriers to your sort of Google of Web3 coming from?
Great question. Yeah, so it is global. So there's a community of indexers, they're called, which are like nodes. They're almost Google-like companies, but they're all individual and they're located all around the world over many different continents. And so this is very much a global movement. And I think it's important that we remember that here in America. And I know London is thinking of an ETH ETN that is physically backed. And with that, in America, we don't want London to beat us to it. So I'm looking forward to the ETH ETF coming soon.
Of course, you
Tegan Klein, CEO. Oh, I'm sorry, Caroline.
Entirely my fault, Ed.
Tegan Klein, CEO of Edge and Node. What I was going to say, someone that came from the world of sort of traditional finance, London, Wall Street, and now in the world of Web3. Let's get another story. HiveMind Capital Partners is trying to bank on the latest crypto renaissance by betting on an NFT comeback. The firm is seeking to raise at least $50 million for a fund dedicated to digital art and blockchain. This after the firm already acquired prized NFTs from the portfolio of Starry Night Capital, an NFT fund launched by the disgraced founders of bankrupt crypto hedge fund 3 Arrows Capital. A lot going on in that world. More stories to come.
Meanwhile, we've got to get back to the top story when it comes to US, to policy, to regulation, all things TikTok. We're going to be bringing on a Republican representative. They're from Georgia. Buddy Carter joins us next. This is Bloomberg Technology.
This plainly is a conduct law, meaning we're acting because of the demonstrated malign national security threat of TikTok, not because of the content of anybody's speech. And the bill is narrowly tailored, which is key for First Amendment analysis, because it simply requires divestment, meaning the millions of Americans that love TikTok, I'm not one of them, but they can continue to use the application, but just in a more secure way.
That was FCC Commissioner Brendan Carr before the House passed the bill that could lead to a sale or ban of TikTok in the United States. Let's bring in Bloomberg's Dan Flatley out in DC. The House, as expected, passed the bill. It now goes to the Senate. For some, it's a foregone conclusion, but there is still some politicking to do on this in the Senate, Dan.
Yeah, absolutely. I'm standing here on the Senate side of the Capitol, just having come over from the House where there was a big vote, 352 to 65 in favor of doing this divestment or ban measure on TikTok. The question now, of course, is what happens over here in the Senate. We've gotten a little bit of an inkling over the last hour or so statement from the Intel Committee Chairman and Vice Chairman Mark Warner, a Democrat, and Marco Rubio, a Republican, saying they were encouraged by the House vote. They want to see this passed in the Senate. And then a statement from Senate Leader Schumer basically saying, we're going to look at it. So he hasn't committed to anything yet. The question is, what's the path forward? There's interest here, but we don't have a clear path yet.
Okay. Thus far, at the moment, is there a feeling that this could become a reality? We already know that, Shou Chew, the CEO of TikTok, has been up there already having closed-door meetings with senators, but also they're galvanizing their user base right now. You go on the TikTok app and they're wanting you to get in touch with your lawmakers.
Yeah, certainly a lot of lobbying and advocacy left to be done. I actually met with a couple of TikTok influencers here yesterday at the Capitol who were talking to members. What I've heard in the background from advisors and staffers here in the Senate is that let's see what the House does. Let's see what the House vote looks like. Obviously, we got a big positive signal for the sale or ban from the House today, so that could influence things. there's a receptive audience in the White House. President Joe Biden has said that he would sign this if Congress passes it. So you sort of have two of the three elements that you would need in order to get this into law. But the Senate does tend to work its own will on these kinds of things and to take its time. So that's still an open question. Obviously, TikTok is focusing its efforts on lobbying on the Senate, where they think that they can slow things down potentially.
We just showed some of what TikTok responded to the outcome of the House vote. And I'm sure we'll say it again, but they basically said the process was done in secret and the bill was jammed through for one reason. It's a ban. But on paper, it's not a ban. It's a divest or ban bill. Is there any chatter about the process for a third party to come in and buy TikTok's US operations?
Yeah, it's interesting. You talk to a lot of members who opposed the House bill, and they say this just came together too fast. We have concerns, but 6 months, first of all, the bill came together to the House floor too fast, and then 6 months is not enough time to effectuate a sale. It just takes too long to do something like that. I've heard chatter about various groups coming forward and maybe potentially being interested, but there's no obvious purchaser for this. Companies have tried it in the past. There was a consortium between Walmart and Oracle and some others a few years ago that tried to buy it. It didn't happen. The company is much more valuable now. The company has said, TikTok has said that it's going to fight this in the courts. So even if this were to get through Congress and be signed into law by the president, there's still going to be legal challenges, and whether they could get a sale done in 6 months is a very much an open question.
Dan Flatley, plenty of questions still to be asked. We thank you so much, and let's ask a few more. We're pleased to have someone fresh from voting on the Hill, Republican Representative Buddy Carter of Georgia. And in fact, you're a co-sponsor of the bill. And I'm interested, therefore, with your perspective here, with it passing through the House, but former President Trump saying he actually is sort of backtracking, having originally been the first one with an executive order against TikTok. He now thinks if you pull away at TikTok, it makes other rivals more strong, certainly Meta, for example. Are you still standing by the view that TikTok should be banned or sold?
Well, let's make sure we understand now. We're not talking about banning TikTok. This is up to TikTok. This is up to ByteDance. They make the decision on whether they want it to go away or whether they want to divest themselves of the ownership of this. This is two questions here. First of all, this is a question about, is it going to be banned? No. They have to divest themselves. That's a question that only they can answer. The second question is us in Congress, us in the House and in the Senate, and that is, this is about national security. Are we going to take national security seriously? The number one responsibility of the federal government is to protect our homeland and protect our citizens. We have to take it seriously, and it is about national security.
Congressman, thank you for your time this morning. Project Texas was the plan whereby the US user data of the TikTok app would be housed in data centers onshore here in the United States, owned and operated by Oracle. Were you not convinced of that plan such that you co-sponsored this bill? Why did that not work?
No, it doesn't matter where they are based. If it's owned by the Chinese Communist Party, that's the problem. And that's the responsibility of Congress. That's our responsibility to guard against these kind of national security issues. That's why we acted on this. And, I would beg to differ with some of my colleagues who are saying, oh, this was too rushed, this was too rushed. We've been talking about this for a long time now. And remember, TikTok has been banned on government phones for some time now. So this is not anything new. And again, this is not a ban. We're just saying that ByteDance, the parent company of TikTok that is owned by the Chinese Communist Party, they must divest themselves of this. And the bill specifically says adversarial countries. I mean, we're not talking
Congressman,
about it.
Congressman, I'm sorry to interrupt you, but there is a choice on ByteDance and TikTok side as well. It's a divest or ban, and Bloomberg's reported that TikTok will exhaust its legal options to avoid a sale or a divestiture. There are 170 million Americans who love using TikTok. What do you think is fair in the case where TikTok just says, we're going to dig in here, we will not sell to a third party?
Well, if they're not going to sell to a third party and they're just going to continue to be used by the Chinese Communist Party, then I think that we have to step in and we have to say, no, you're not going to be allowed here. You know that American apps are not allowed in China. I hope everybody realizes that. And you know that the content of TikTok in China is different than the content of TikTok here in America. You know, we're not just talking about dancing people or cats or being on TikTok. We're talking about the ability of the Chinese Communist Party to get your data, to actually use biometrics against you. And that's something that we have the responsibility in Congress of guarding against. If we don't do this, then we're being irresponsible in Congress.
What's interesting is if indeed ByteDance is sold, that impacts those that have invested in ByteDance, the parent of TikTok. One is actually, well, a billionaire GOP mega donor. Jeff Yass being one of them, $15 billion riding on his investment. And of course, he made his fortune with Susquehanna International Group. How are you talking to some of the people who have a lot of money on the line when it comes to their investment in TikTok?
Again, if they don't want to lose their money, and I certainly don't blame them, I wouldn't want them to lose my money either. But a divestiture means that they're not going to lose their money. It just means that it's not going to be owned by the Chinese Communist Party. And when you take the chance of investing in something that is owned by the Chinese Communist Party, then those are the chances you're taking.
Have you spoken to Jeff Yass out of interest?
No, I have not.
All right, Republican Representative of Georgia, Buddy Carter, we appreciate you joining us almost immediately after the outcome of that House vote. Venture capitalist Mark Farrell, a leading contender for San Francisco mayor, unveiled a package of proposals that include providing more money to the police and restricting access to public parks as he hopes to boost public safety, revitalizing downtown SF and revamping the city's image. But we also talked about technology and what he'll do to incentivize the industry. Have a listen.
I'm fortunate to already have support from diverse communities across San Francisco. In every single neighborhood, every single economic makeup of a family, every single business that you could imagine and career that you could imagine. So I believe my private sector background matters. And you asked that question before. In particular, over the next 4 years, when we have a projected $1.5 billion budget deficit in the city of San Francisco, having a mayor who's actually read a P&L, knows what a balance sheet looks like, and has been in that sector for over 20 years matters to the city of San Francisco. We cannot afford to have somebody come in and learn on the job, or we can't afford 4 more years of the same administration where you're simply listening to other people tell you where to put your dollars. We need a mayor who's going to lead on the budget and be strong with his or her priorities, and that's what I offer San Francisco.
Okay, so let's talk about technology. Technology as a business, as a taxpayer in this city. How are you going to approach the biggest employers, the employers also of a lot of people that live in this city but might commute outwards to Silicon Valley?
What San Francisco will have in me next year as mayor is finally a mayor that once again addresses and actively engages with our business community. Technologies have been a big part of it here in San Francisco, quite frankly, for the past 10 plus years. We've been over-indexed to the technology sector here in San Francisco, and we need to make sure we actively court that industry to come back to the city of San Francisco, because technology companies have left in droves. But I also believe it's the impetus of the next mayor to diversify our downtown economy. Once again, focus on hospitality. Once again, focus on residential.
My conversation with Mark Farrell, Karen, he was somebody who was interim mayor in 2018 after the death of Ed Lee. He was late to the race, but you look at how quickly he's raising funds to catch up and where the funds are coming from. And that's the technology story for me.
I mean, you've deep dived so much into areas and pockets of growth in particular, rejuvenation that AI in particular has brought at the area. Cerebral Valley, for example, your documentary of late. I mean, this is someone who's got to be seeing the opportunities as well as some of the things he still wants to be fixing.
He wants to offer tax incentives to tech companies that make in-office mandatory and also that scrap in-office cafeterias so they go spend in the local economy. So he recognizes the AI boom that's happening, but I don't know how popular mandatory in office is going to be in this city. It's hard to call.
It's getting a little bit more popular coming from some of the C-suite levels, though, of late. Meanwhile, talking of C-suite, we know that one person has been busy. And of course, Shou Chew, the CEO of TikTok, has been busy on the Hill talking to senators, we understand, as we look to potentially a ban or divestment of TikTok from ByteDance being pushed through by the House. It really did sail through that vote earlier today. The question mark here is what happens with the Senate. And we just heard from one key lawmaker there.
Yeah, and his point that really stuck out to me was, well, if TikTok chooses not to divest, we'll make them.
Yeah.
But this was supposed to be a divest or ban bill.
And look, this is very deja vu. This was happening in prior administration with a prior decision and push to have them divest, and people being lined up then. And Oracle was one of them, and Oracle became, well, the data answer that doesn't seem to be living up to many hopes right now for some of those lawmakers. That does it for this edition of Bloomberg Technology. What a big one we had.
Yeah, and in some ways a historic show. Recap everything that was discussed on the podcast. We're on Apple, Spotify, iHeart. And so many of you are listening to the podcast on a daily basis on the Bloomberg platforms. Thank you so much. From San Francisco and New York City, this is Bloomberg Technology.